What if I told you that one man has beaten the stock market for more than 6 decades, turned a small investment into one of the largest fortunes in history, and did it without chasing trends, predicting the market, or taking crazy risks? That man is Warren Buffett. Known as the Oracle of Omaha, Buffett didn't become one of the world's richest people by luck. He followed a set of simple investing principles that almost anyone can understand. The amazing part is that these rules are just as powerful today as they were 50 years ago. In this video, you'll discover the 10 investing rules that helped Warren Buffett build extraordinary wealth. If you stay until the end, you'll understand why millions of investors study his advice every single year. Let's get started. The first rule is to invest in yourself before investing in anything else. Buffett has said many times that the best investment you'll ever make is in yourself. Stocks can lose value. Businesses can fail. Markets can crash. But your knowledge, skills, and experience stay with you for life. When Buffett was young, he spent hours reading books about business and investing. Even today, he reads for several hours every day. He believes that knowledge compounds just like money. Every book, every lesson, and every experience makes you a little smarter than you were yesterday. If you want a better financial future, start by improving yourself. Learn new skills. Read more books. Study successful businesses. The smarter you become, the better your financial decisions will be. The second rule is to think long-term. Most investors want quick profits. They buy a stock today and hope it doubles next month. Buffett has never invested that way. His favorite holding period is forever. When Buffett buys a great company, he isn't thinking about tomorrow's stock price. He's thinking about where that business will be 10 or 20 years from now. Real wealth isn't built by jumping from one investment to another. It's built by owning great businesses for a long time and allowing them to grow. Patience may sound boring, but patience creates fortunes. The third rule is to buy wonderful businesses, not just cheap stocks. Many beginners believe the cheapest stock is automatically the best investment. Buffett completely disagrees. He would rather own an amazing company at a fair price than a poor company at a cheap price. That's why he invested in companies like Apple and Coca-Cola. These businesses have loyal customers, strong brands, and consistent profits. Great companies continue creating value year after year, and their shareholders benefit from that long-term growth. The fourth rule is to ignore the crowd. The stock market is driven by emotions. When prices rise, everyone wants to buy. When prices fall, everyone wants to sell. Buffett does the opposite. He has famously said to be fearful when others are greedy and greedy when others are fearful. That doesn't mean buying every stock during a crash. It means looking for great businesses when fear causes prices to fall below their true value. Successful investing requires independent thinking. Don't let social media, television, or headlines make your decisions for you. The fifth rule is to never lose money unnecessarily. One of Buffett's most famous quotes is, "Rule number 1, never lose money." Rule number 2, never forget rule number 1. Of course, every investor experiences temporary losses. What Buffett really means is to avoid taking unnecessary risks. Don't invest in businesses you don't understand. Don't borrow money to buy stocks. Don't chase unrealistic returns. Protecting your money is the first step toward growing it. The sixth rule is to stay within your circle of competence. Buffett doesn't invest in every industry. If he doesn't understand a business, he simply says no. Many investors think they need to know everything. Buffett believes the opposite. You only need to understand a few great businesses really well. Knowing what you don't know is one of the biggest advantages an investor can have. The seventh rule is to let compound interest do the heavy lifting. Albert Einstein reportedly called compound interest one of the most powerful forces in the world. Whether or not he actually said it, Buffett certainly believes in its power. When your investments earn returns, and those returns begin earning their own returns, your wealth starts growing faster over time. That's why Buffett became much richer later in life than he was in his younger years. Compounding rewards patience more than anything else. The eighth rule is to control your emotions. The biggest enemy of investors isn't inflation. It isn't interest rates. It isn't even market crashes. The biggest enemy is emotion. Fear causes investors to sell at the worst possible time. Greed causes them to buy at the highest prices. Buffett stays calm because he focuses on business value instead of market noise. The ninth rule is to always keep learning. The world changes constantly. New industries appear. Technology evolves. Consumer habits change. The best investors never stop learning. Buffett continues reading, asking questions, and studying businesses even after decades of success. The moment you believe you know everything is the moment you stop growing. The 10th and final rule is to stay patient. Patience is Buffett's greatest competitive advantage. Most people give up too early. They expect instant success. Buffett understands that wealth is built slowly through consistent decisions repeated over many years. Small improvements become large results. Small investments become large portfolios. Small habits become lifelong success. If there's one lesson to remember from today's video, it's this. Building wealth isn't about finding a secret stock. It's about following simple principles consistently for decades. That's exactly what Warren Buffett has done throughout his entire career. If you found this video valuable, make sure to subscribe because in the next lesson we'll explore another timeless investing principle used by the world's greatest investors. Thanks for watching, and remember, the best investment you can ever make is in yourself.